We're joined by Octavio Marenzi, who is the CEO of Opimas, excuse me. Octavio, let's talk meme stocks first and foremost. Is there a part of you that thinks, despite the risks, a tiny portion of a portfolio should be allocated to some of the most discussed names on Reddit? How would you play this?
Well, I have to say I'd be very, very cautious indeed about putting money in those kinds of stocks. They're just so volatile and so many people have been burned so badly. And it's really hard to understand what's going on with them and see the rhyme or reason between these enormous moves that we see up or down. I think it's sort of a reflection of the fact that during COVID, we've seen a big shift in terms of trading volumes away from institutional trading more towards retail trading volume. And the retail investor is a bit more difficult to predict. And so they do sort of slightly crazy things. And so a lot of the institutional investors have been sort of caught flat-footed, sort of scratching their head, trying to figure out what's going on here. So in terms of meme stocks and how much of my portfolio would I actually allocate to that? Well, I guess it depends how good a trader you think you are, but it's all about getting in at the right time and getting out at the right time. And we're talking about within a few hours. So if you think you're a great trader, then yes, you should allocate more of your portfolio to it. If you think you're sort of an average or mediocre trader, I would keep well away from this. And I would allocate as much to meme stocks as I would to lottery tickets or things like that in my portfolio.
That is a really good analogy. So we're taking a look at some of the meme stocks. BlackBerry, we also had up on the screen, I believe, a moment ago. Wendy's, which is a new entrant into the chat room here. There you're taking a look at Wendy's over today's activity, higher by about 16%. And there is Clover Health as well. That's also been in focus, mentioned skyrocketing on the Wall Street Bets Reddit forum, where much of this activity commences, we do know, and begins. And so for Clover Health, maybe we go there first and try to break this down a little bit more, because when we think about the detachment from fundamentals that we see in many of these stocks, Clover Health is one of those that's seeing federal investigations come towards it. And with that in mind, we had already seen so much of the flowing into previous names like AMC and Gamestop, where there hadn't been the case for the valuation being supported at some of the run-ups that we had seen in the shares, even though investors continue to largely retail, and then perhaps some momentum traders and larger institutions also piling in there. And so what is the role of the institutional investor and the momentum trader that you're seeing in kind of permeating some of the attention that is thrust towards these individual names, even as we do know that the initial activity may be triggered by some of the Reddit retail traders instead?
Well, I guess there's sort of a group of what you might refer to in the past sort of high frequency traders or momentum players or people like that who do feel they have a really good insight in terms of trading activities and understand what other counterparties are really up to and what they're doing. So those kinds of firms are going to get in and out of positions very quickly. They're very good at trading, but they've been caught off guard by all this because they're not really sure how the retail investor thinks. I mean, these guys are very, very good at looking at order books at the exchanges and in dark pools and figuring out, are there some sort of block trades out there that I can trade against and I can get some sort of advantage over? With a retail trader, that doesn't work. So all their algorithms, all their trading strategies are basically honed to other institutional investors, and they're not really sure what to do. So I don't know how big a role those players are really playing. I think they're sort of standing by the sidelines a bit and saying, well, we know this a bit, this kind of space, but not that well. So it's not, the real momentum players, I think, are looking for longer term momentum than just a few days or a few weeks in terms of where the stock is going to go. It's so difficult to time this. So I think that's pretty difficult for them to do as well. So there's definitely a role there that the institutional investors, that kind of institutional investor is playing, but I don't think as much as they would have in the past. They're also looking at this fairly warily and saying, is this really we can make money or not?
You know, it's a really interesting perspective that you're providing. And so with regard to the broader meme stock mania that we had seen, did you expect that it would last as long as it has, number one? And I suppose number two, how do you surmise that this may reshape the way that retail investors trade in the future, especially as we're looking at so many different asset types that they could potentially shift their attention towards in the future, even though equities seem to be the way that they're going right now? How do you expect that to overflow into some of the other assets where we've also seen heavily talked about cryptocurrency, Dogecoin namely, and even Bitcoin, which is essentially birthed from Reddit forums and Reddit chats that had taken place almost a decade ago now?
Well, I guess there's a few questions there. I mean, let me go through them. I mean, first of all, has this lasted longer than I expected? Definitely. I mean, there's the old saying that a fool and his money are soon parted. Here we sort of see a degree of momentum and interest in stocks and driving them up and down wildly that really surpassed my expectations by quite a bit. So I think a lot of the people who got into things like GameStop too late lost a lot of money, and so I thought there would be a lot of negativity about jumping into those kind of stocks, but it seems to be quite the opposite. I mean, that seems to whet people's appetite more than anything. And there's a certain kind of day trade or a retail trader that is really these kinds of large movements and feels that they can time this and make lots of money there. So really, yes, it has gone on much longer than I thought that it would die down by now. But it seems there's a lot of liquidity out there. There's a lot of money chasing a few stocks. And so we're going to see these kind of wild price movements and valuations that seem to have nothing to do with the fundamentals, as you pointed out earlier. There seems to be a sort of bifurcation between what a company really does and how much money it really brings in and what its stock price does. So that is sort of the environment we're moving in. And I think that's going to continue for a while. As long as there's all this liquidity out there that the Fed is pumping into the market, investors are going to be looking for places to put that money. Now you talk about things like Bitcoin and stuff like that. The price of Bitcoin now has been cut in half, and so sort of Bitcoin has become almost a meme stock of its own at this stage, and it looks like it behaves very much in that way as well. I think with something like Bitcoin, what you're seeing is a few factors. I mean, there's sort of the Elon Musk effect where we're not sure whether he likes Bitcoin or not, and he's in and then he's out, and that has caused some people some uncertainty about that as an alternative currency. I think the US regulators and the IRS and the Treasury have been looking at Bitcoin very, very skeptically and somewhat afraid of it as a replacement for the dollar. And of course, they don't want that to happen since they control the dollar. They don't want to see a replacement come up for it. So they would sort of like it to disappear, I think, as an alternative, as a really alternative currency to the dollar. So they're sort of making life very difficult for cryptocurrency holders and cryptocurrency exchanges. But they seem reluctant to actually just come out and ban it outright. They don't want to do that. They think that would be very unpopular politically. So what they're really doing, I think, is sort of doing a death by a thousand cuts by saying we're going to regulate it here and there, and the IRS is going to look a bit more closely, and the Treasury is going to look more closely, and we're going to require these cryptocurrencies to disclose more and more information and just make life overall unpleasant and sort of miserable for them. I think that's the direction they've chosen there.
You know, it's actually interesting, and we've been talking about this story this morning as well, in how the U.S. had recovered some of the Colonial Pipeline ransom, and essentially we know that this was paid out in Bitcoin. This ransom was paid by Colonial Pipeline in Bitcoin. However, being able to recover that, I think, has issued a stark warning for Bitcoin and the value of it. You can read into that so many different ways. You could read in that from a malicious actor's perspective to say, okay, well, how much should we really be valuing Bitcoin at if it's not as encrypted as we thought it might be, or if it can be taken back. However, I think there's a lot more in the know your customer requirement that still has more of the seeming regulatory conversation that has yet to take place. I do just want to switch gears briefly here, because another huge topic that we've been watching more internationally here is the G7 countries backing a U.S. proposal on a 15% global minimum tax. What does that signal about America's approach to the global economy from your perspective?
Well, I guess the Biden administration is concerned about running out of money, as so many of the other G7 governments are. So they're quite happy to put into place a minimum to avoid some sort of tax arbitrage between different countries and prevent companies migrating sort of low tax havens. The problem is that the G7, I don't think any of them have a tax rate that's that low. I think they're all well above the 15% tax rate at this stage. The countries that have much lower tax rates are sort of more tax haveny like locations. Ireland has a very low tax rate overall. There's a few other countries that have played on that. Switzerland is a bit lower than the others overall. So the action really isn't amongst the G7s. It's those smaller countries that are trying to attract companies to them that way. Now, it's interesting if you look at the G7, some of the participants within that. I mean, they're happy to have a minimum corporate tax rate in place. At the same time, a country like Italy is actively trying to court individuals to come move to Italy, and is lowering incredibly low tax rates, particularly if you're a high income earner, to come live in Italy over a 5-year period. So at the same time they're saying, yes, let's have a minimum tax rate in corporations, they're basically letting the bottom fall out of individual corporate income taxes and trying to attract those people. So I think you're going to start to see some of these countries cheat at the edges and try and attract companies nevertheless, because they all need the money desperately. They're all in very large deficits, and they need those corporations, they need those jobs, they need the income taxes that they're great. And I think they're going to say they pay lip service to sort of minimum corporate tax, but at the end of the day, they're going to try and attract those companies into their countries as best they can, and they're going to have to do that with lower tax rates.
Excellent insights. Octavio, thank you so much for joining us this morning here on Cheddar Opening Bell. Octavio Marenzi is the CEO of Opimas, joining us this morning.